welcome to another episode of KaleidoCAST. Today we'll dive into a topic that is more important than ever, and that is risk management in banks. We will be discussing why risk management is not just another checkbox on a to-do list, but rather an essential component for the bank's survival. And with me here today to discuss this exciting topic, I have a representative from Kaleido Private Bank, the head of risk management, Silvio Fischer. Thank you so much for taking the time to be here today, Silvio.
Thank you, Ina, having me here. It's a pleasure for me to discuss and explain more about risk management.
That's good to hear. And I would like to start off with one thing, and that is better understanding risk management in banks. Because, of course, I understand that it's about managing risks. But what would you say managing risks in banks is all about?
In my opinion, it's not only about ticketing boxes to ensure we are in compliance with all regulatory requirements. Yeah. It's more about the main foundation. We can run a bank, we can ensure the going concern, so we go not one day bankrupt, we have no reputation risk, and at the end that we can service our clients with the right products at the right time, at the right place, and finally his client deposit is safe with us.
Yes, and that makes it, of course, easy to understand why risk management in banks is so important. And now I would like to understand this concept even better. So, to get the basics of risk management in banks, what would you say are the basic components?
The components is first the responsibilities. So you have really defined the responsibilities, no question, not knowing who is responsible for what. And for this we have three pillars. This is the first level of defense, second and third. First level is all about the employee itself takes responsibility, the head of private banking, the head of accounting, the head of trading and so on. Yeah. On the second level, it's me together with my colleague, head of compliance. We're on a second level control level, so we control and monitor in addition to the first level. And we are working with a risk and control self-assessment exercise every year. We do it. Yeah. We work with an internal control system which shows me controls are done and what was the result. And then I'm working with an in-time reporting system. So if someone asks me what is the level of risk, I can provide this information in expected time. And the third level is all about internal audit. Yeah. Also, all these three lines of defense ensures we are running not a bank without knowing what is our risk level.
And I assume that there are multiple different types of risks and not just one. Is that correct?
Yes, it's a good question. Today in an uncertain world, I'm positive thinking, we are not in an uncertain world, where as a private person you are facing many risks when you buy an iPhone, it's not running right, or whatever in your private and business life. Especially in banks, we work with 4 areas. One is the credit risk. So we are losing our assets when we're granting a loan to a client and he's not able anymore to pay back. Another area is the market liquidity risk. So these are more external driven factors. Stock exchange goes down, interest goes up, or we have a bank run. So we must ensure the liquidity to pay the cash back. The third area is all about operation risk. Yeah, it means non-adequate procedures. We do something wrong, or our used systems tool are not calculating right the figures. Then, of course, human careless mistakes is also part of, and external driven threats, let's say about cyber risks or failure of our outsourcer, service provider, and so on. This is operational risk, and last but not least, the fourth area is all about enterprise risk. So we do assess on a yearly basis the strategy. Have we had the right strategy? HR, do we have the right people at the right place, and so on.
Okay, so the 4 types then, to
Yes.
summarize it was the credit risk, market risk, regulatory risk, operational risk.
Yeah.
Okay, then I got them down.
Mm-hmm.
However, now I'm very curious to know, what are the strategies that we use, or what do we sort of do to manage these types of risks here at Kaleido?
The strategy is, let's start with my personal opinion. You must be passionate about running risk management. Mm-hmm. I think this is a key topic, and of course you have then all these formal inputs, observation, regulation. Observation inputs, the source is of course knowledge and experience. Where I get the knowledge experience, also I'm aware I do not know all in this world, but I know where I get the information. The knowledge. Mm-hmm. For this, I'm participating in roundtables, or a member of Swiss Risk Association. I have also founded a risk expert group. This is the source of my knowledge and experience. In addition, I have some knowledge because I was on the other side. I was former CPA, also auditing, controlling banks. And last but not least, our daily observations. So daily observation means when we have an incident, for me this is a positive sign. Mm-hmm. So we detected one thing, and so we can then close after analysis the lack of controls or an inadequate procedure. But finally, also, here I'm honest, all these new regulations which are coming from a regulator, I take it as a valuable input. We can also learn because regulator issues a new regulation only if something went wrong. So we can also learn what went wrong. New regulation always is valuable for our bank.
I think it's no doubt for anyone at the office or watching this video for that matter that you're passionate about this subject and that you have a lot of expertise within it. However, this skillful knowledge when it comes to risk management, how does this benefit our clients?
Our clients will benefit, let's say, to have their deposits, mm-hmm. of course, including their securities with a safe bank. So safe means, okay, their cash is not at risk, one point. But second point is also, tomorrow we are still in the market, because we did service with our products and services to this client, for example, digital assets or a credit. So he doesn't want to lose his main bank or second bank. This is the main profit our clients can have with us. And together with, let's say, our principle, which means also risk management, not only about tools and systems, it's more about people and culture in our bank.
Oh, that's great. The client always comes first here.
That's right.
And I think that's a great way to really wrap up this conversation. And I would like to say thank you to you, Silvio, for being here and sharing your insight.
Thank you, Ina. It was a pleasure for me.
If you want to learn more about risk management in banks, and for example want to learn more about the strategies that we use to deal with these different types of risks, well then I recommend that you go ahead and check out our blog post on this topic, where we go a little bit more in depth into each one of these types of risks. That blog post is linked in the description below this video, and with that it just remains to say thank you so much for watching, and I hope to see you next time on KaleidoCAST.